talk about some of the different loan products out there. Can you explain the difference between adjustable rate and fixed rate mortgages?
Certainly can. So a fixed rate mortgage is the interest rate on that loan is fixed for the life of the loan. It could be a 30-year loan, 25-year, 20-year loan. So for instance, today, if you got a 6% interest loan on a fixed rate 30-year mortgage, you're going to pay 6% interest for the life of that loan. An adjustable rate mortgage is adjusted based on the current interest rate environment. So you can do a 5/1 ARM, you can do a 1/6 ARM where the loan is adjustable. So it's fixed for the first year and it adjusts every 6 months after the first year. Or let's say for a 5/1 ARM, it's fixed for the first 5 years and then it adjusts the next year. So typically those adjustments are up, they're never down. So something to consider. The reason why a buyer would consider a loan like that is because the adjustable rate mortgages typically offer a lower interest rate, whereas the fixed rate, it's fixed, it's consistent, a lender. So for instance, if the lender on a fixed rate mortgage is 6.5%, it's likely that the adjustable rate mortgage, based on the same type of scenarios, assuming credit score, down payment, that may be 5.875. But if that loan may adjust and the interest rate environment has gone up, if you haven't refinanced out of that mortgage, it may adjust to 7%. But there are caps on the adjustments depending on the type. If it's important to folks and they feel like interest rates will be lower in the short term, they'll do an adjustable rate mortgage to go in with a lower payment, and then in a year or so refinance when interest rates have come down prior to the escalation of the interest rate. Hopefully that makes sense.
It does. Now, what would be a reason again that someone would want to do an adjustable versus a fixed rate?
Lower payment, essentially.
Lower
if
payment.
There's a debt to income issue, they want to keep their payments lower, or they need to get their payments lower to qualify for the loan, they can do an adjustable rate mortgage. Typically, an adjustable rate mortgage has lower points or upfront fees associated with it, because to the lender, it's a lower risk. Like if interest rates are higher in the future, they can pass those higher fees on to the buyer. If they're, with a fixed rate mortgage, if interest rates are higher in the future, well, they're higher in the future, the borrower's interest rate never changes. And if they're lower, the borrower could always refinance. So it's advantageous to the borrower long-term, whereas the adjustable rate is a short-term advantage. And those are two things you really want to factor out, like the pros and cons. And a good lender should be able to lay those out to you, but ultimately it's your decision.
Is there a credit requirement for adjustable rate mortgages that's different from fixed rate?
Yeah, well, there are so many different outlets for it, but typically adjustable rate mortgages, the credit requirement is a little bit higher, maybe 20 points higher. So if the fixed rate is, 620, typically an adjustable rate mortgage will be a 640, but there's so many different programs that allow lower credit scores, higher fees, higher credit thresholds. So it's different on a case-by-case basis, but typically the adjustable rate mortgage requires a higher credit score.
And you touched on something else that I always try to have a conversation with buyers about is you can't really go by somebody else's experience, right? Every individual person will have a different experience with their lender and their credit that they have to work out for themselves. They can't go by somebody else's experience.
100%. And what's important is no one, including me, has a crystal ball. So we don't know what the environment will be. You also want to understand if, could there be any changes to your employment or income in that short term that would affect your ability to refinance later. So it may be better to take a fixed rate mortgage so you sleep a little bit better at night versus just trying to get a shorter payment in the short term.
Awesome. Great advice. Trent, how can people find you?
601-291-3135, Instagram at Banking on Real Estate. Reach out to Kim. She has my direct line. When Kim calls, it's like the back call signal, or the back girl, however you want to, however you want to call. We tend to pick up when Kim calls. So reach out to Kim, reach out to me. We'd love to just talk with you and see what's going on.
Yep. All right. Thanks, Trent. Talk to you soon.
My pleasure.
2023, I'll be talking to lenders, some of my vendor partners, just to give you a better idea of how the process works. So buying a home, selling a home. I think education is very important at this time to keep buyers and sellers informed about what's happening in the market. So look out for those videos. Thanks.